Hey guys, I'm going to do a quick video on why I entered my target trade on Thursday, the 23rd. I'll try to be as concise as I can while also going over the majority of my logic. There's a few reasons that I like this trade. First, we'll start with the chart. I almost always chart on the 4 hour because, as opposed to a daily, because I like having the after hours and pre-market data on those candles. Um, so, um, anyway, the 4 hour, the 1 hour, and the 10 minute usually. For this video, I'm going to probably just do the 4 hour and the 10 minute. We'll start with the 4 hour. You can see that we got a dip over here to 214.6 on Monday the 20th with a pretty solid bounce back to 219-ish or so by close. If we pop into the 10 minute, you can see we got that dip and then it popped back up by close. So big reason that I like this spot is you can see this area over here back in May was a big area of resistance that when it broke through, we got this whole run all the way up from 217-ish to over 260. So I was looking for a pop in that spot, and that's what we got. So I pay more attention in general to where a stock closes versus where it opens. The main reason for me is that you tend to see the largest dark pool prints come in where at the stock's closing price, usually after hours or pre-market. So that day we closed at 219.19. You'll see how that general area proves important shortly. All right, so let's jump into the 10 minute. This is 10 minute on 10 day. So I generally won't enter a swing, even if it's just a day or two, until we clear the 200 SMA on the 10 minute time frame. For me, it's just a really good gauge of the stock's trend, whether it's short term, obviously, whether it's in more of an uptrend or more of a downtrend. So the purple line is my 200 SMA on the 10 minute. So this line right here. So what I want to see now as to help me gauge whether or not I want to enter this is some consolidation under the 200 SMA. Similar to what we saw over here, which obviously failed, but that's the kind of thing that we want to see. So you can see, let me jump down into a shorter time frame here. So you can see that we got some good consolidation underneath 221 after that dip. It came up, it tested, it dropped. It came up, it tested, it dropped. And we had on Tuesday and Wednesday this last week, we basically had inside days from Monday's full daily candle. So you can also see when we drop down to this time frame that I like to use Fibs. I specifically like Fib retracements in whatever direction you're looking, whether you're looking for an upswing or a downswing. I still use Fib retracements. I will probably do another video on Fib retracements in the coming days and or weeks, more so how I like to use them. So anyway, after Wednesday, we saw a high of 221.28 and a low of 217. So that's here to here on the Fibs. So basically what I'm looking for on Thursday, my focus was a break of that 200 SMA, and I felt like there was a really good chance that was going to happen just based on the way it was kind of flattening out and the way the price had been kind of testing that general area. You can see we break over the 200 SMA multiple times on Thursday. Let me drop down to a shorter time frame here so it's a little easier to see. So here's the 200 SMA. This is Thursday. This was the day that I entered the trade. So I didn't personally enter the trade on any of these these breaks. Um, for me, the price action was just a little too wild, and I wanted to give it a chance to cool down and or consolidate around that 200 SMA, because it usually doesn't just punch through and take off. There's usually a couple of tests and fails before it finally goes through. Um, the other key here is you can see it broke over and under a few times, basically. About an hour or so into the day, I actually almost bought it on this dip here when it, on this candle, when it came back over the 200 SMA. I don't remember exactly why I didn't, but then you can see we got this big red candle down, but it managed to hold and bounce on that candle and the following candle basically at the pre-market high, which is, I have a little study here. These teal lines are the pre-market high and low. And I like to use it because a lot of times when you see a breakout, you'll see it come down and test and bounce off of that pre-market high. So you can see it did it on this candle. It basically did it on this candle, and then it did it a third time on this candle. And then what we got was a break over the 200 SMA right at the 50% fib retracement level. So that for me is basically like my golden trigger. That I love to see, because you generally get a much stronger move when you get that consolidation and bounce when the 200 SMA crosses right at the 50% retracement. So I love the risk to reward on this trade. After getting the candle close over that 50% fib, and then I pulled the trigger just a hair over, I think it was 219.14, which is the 50% retrace. So it was probably somewhere on this candle that I entered this trade. And the reason that I chose the 230 calls happened to be based off of a combo, but more or less off the Fibs and the Darkpool data. So I'll show you the Fibs first. If we go back and look at the 10-day again, you'll see that the 161.8 and the 261.8 Fibs are basically at 224 right here, and 228.21 or 228.20 right here. And then you have the 423.6, which is much higher. And in general, you'll probably see some good resistance in this range here from 231 to 233, somewhere in there. Hopefully I'll be down to just runners if we get to that price. I plan on personally taking about 50% or so of my position off the table at the 161.8 at 224. I figure that will be pretty close to 100% gains at that point. The idea being that the rest of the position now becomes a free roll. Even if if the rest of the contracts go to zero after that, you break even on the trade. So my second trim will be around Friday's top, because we saw pretty aggressive selling there. Friday's top is this right here, right at Friday's open, where it went up and then it immediately slammed back down before then flushing the following day. So right around here, this little level, it's around 226.25. I plan on taking another trim right there. And then assuming we get another dip, as long as it holds the fib here at 224, I'm going to continue to hold my position. If we continue to run up, I will take another trim at 228 or so, just depending on the price action. If it's really moving, I'll probably hold until we break that. If it looks like it's struggling moving into that level, I'll probably trim it before it hits that fib. How much of my position I trim there will depend on what day it happens to get there. If we run really hard, say end of day Tuesday, we get all the way up to 228 or so, I probably hold a larger position into the end of the week. But if it takes, say, till like Thursday to get to that target, I'm probably going to be trimming one contract here or there, two contracts here and there before we get there. So again, it just kind of depends on your risk tolerance, how long you want to hold, and how many contracts you have. All right, so that's basically the charting and the concepts that I used to enter the trade. Now we're going to take a quick look at the Darkpool and flow data on TGT. So let me pull that up. All right, so this is the flow. I actually want to look at the Darkpool first. All right, so this is usually something that I do before I enter a trade. For what it's worth, it's stuff that I do the night before, the morning of. So what caught my eye on Target was the gap in Darkpool prints. Let me back this out just a little bit because it's so you can see on TGT it makes a really nice overlay of the relevant Darkpool prints, the dates, the sizes, and then it overlays them on the chart, on a chart. So you can see that on the 20th, we got a good Darkpool print here for about 35 million. And then we don't have any other Darkpool prints of any significant size until 238.20. That was a big determining factor in choosing the 230 calls, because if all things go as well as I hope, that is my eventual target. That was why I picked the 230s, because my hope is that they'll be able to go in the money before the end of the week. Okay, so now let's flip over to the options flow. So basically, TGT, if you haven't used it, has just an obscene amount of information about everything from options flow to Darkpool to searching based on candles and stuff. I highly recommend it. I'll go ahead and throw a link where you can get 10% off in the description of the video. So anyway, you can, I like to go down to the calls and puts heat map. That's kind of what I look at, because these are the larger contracts in volume and premium spent. And I just like to compare the calls versus the puts. I want to see more closer to expiration than, stuff that's really far out. So, if all of the contracts were in June or later, I don't care so much about those. This one and this one are close enough that I am very interested. Furthermore, the contract size, the premium size, is really high. Specifically on the January 220s, you have a really high OI. So there's a lot of interest on that one. Likewise, if you look at the put side, there's not anything of real significance. You can see that the 1223, which just ended yesterday, was the only one that had really significant size on the puts end, and those are irrelevant now. And they were essentially irrelevant on Thursday because that was the day they expired. So that is the information that I use to decide on this trade. You put the Darkpool together with the Darkpool and the flow together with the charting, and you get yourself a nice little swing play, we hope. Hopefully this helped give you guys some insight how I research and decide to take a trade. Please like and subscribe if you found this video useful. On Twitter, I'm at Zach's Trades. Give me a follow. Thanks. I appreciate it, guys. Take care. Have a happy Christmas.